Today, I am going to share with you all my top 5 stock picks to beat the indexes in 2025 and beyond. We'll dive into each one, covering their financials, expected growth, and both my bull and bear cases to give you all a well-rounded view as to why I think now is a great time to invest in each of these companies. I am a long-term investor, so while I do expect some of these companies to be great opportunities in the short term, I am mostly focused on where each of these stock prices will be years from now. Each of the following companies are ones that I am currently invested in and believe will be successful positions moving forward. So let's get right into it. First up here is Shopify. Shopify is a big player in the e-commerce space, powering millions of online stores worldwide. Unlike Amazon, which owns the customer experience, Shopify lets businesses build their own brand while handling payments, marketing, and logistics. It's easy to use and trusted by everyone from small startups to major brands. With multiple revenue streams and a booming e-commerce market, Shopify is set up for success in the future. I am personally a Shopify customer, as I use it for a small outdoor apparel company that I am a co-owner of called Echo Ridge Outdoors. Shopify made it super easy for us to get an online presence as a small company. Moving on to Shopify's financials, as of recording this video, Shopify is trading around $125 per share. In Q3 2024, they reported a 26% increase in sales and a 167% rise in earnings per share, which has led to the stock price jumping over 40% from the upper 70s to around $115, where it had been hovering for quite a while before breaking upward to right around $125 where it is today. So looking ahead, analysts expect around 28% annual growth in 2025, which is mostly driven by the ongoing e-commerce boom. So, what could go wrong with Shopify? Into my bear case, the e-commerce space is getting crowded with competitors like top dog Amazon and a company called WooCommerce, which is a company with a very similar business model as Shopify. A slowdown in consumer spending could also pose as a serious challenge, and in a scenario like that, revenue growth would obviously dip and the stock might dip down to probably the $90 to $100 range, but I don't see it going much lower than that. So on to the bull case, which is what I think is most likely for Shopify. Shopify will continue to innovate, offering new tools and services that attract more merchants. Their asset-light model allows them to scale efficiently, leading to higher profitability year after year. If consumer spending does remain strong, Shopify could see its stock price climb quite dramatically. So let's take a look at where Shopify could be trading if they continue to execute. So looking through Shopify's numbers for 2024, as well as projected numbers that I've put together for 2025 through 2028, as you can see here, I have them doing 25% revenue growth for 2025, 2026, and then slowing down a little bit to 23% in 2027 and 2028, which gets them from $11 billion in revenue in 2025 all the way to $20 billion in revenue by 2028. I do have their net income growth growing from around 42% to 50%. I do keep most of my numbers pretty conservative. This last year, net income growth for 2024 for Shopify came in at 45%. And total EPS for the year for Shopify in 2024 was $1.55. I have that growing all the way to just barely over $7 in total EPS for 2028, with a low PE estimate of 40 and a high PE estimate of 65. I have their share price by 2028 be growing all the way from between $2 or $280 a share to $455 a share, with an average share price of $368.14 in 2028, which does represent over 200% gain from the current stock price of $125 per share that we are seeing now. I do think in 2025 we could see $150 a share plus for Shopify, but like I said at the beginning of this video, I am not in Shopify for their stock price in 2025. I am excited and in Shopify for their 2028 share price, which I would not be surprised if it was $400 plus. Then I know they're going to have a market cap somewhere between $400 and $500 billion. So definitely a great opportunity to get into Shopify in 2025. Next, let's talk about Nike, which is my second pick for 2025. Everyone knows Nike. Nike is the powerhouse of sportswear built on innovation, marketing genius, and cultural influence. From Air Jordans to cutting-edge performance gear, they are so much more than just a shoe company. With elite athlete endorsements, a massive global presence, and a strong push into digital sales, Nike is a staple household name that isn't going anywhere anytime soon. So, with that being said, Nike stock has experienced a pretty significant decline since late 2021 due to several factors impacting its performance. And I do believe that now is a pretty good time to start a position in Nike if you haven't already. Analysts have expressed concerns about the company's ability to clear older inventory and introduce new products at scale to sustain growth. Challenges include ongoing gross margin pressures and increased competition, particularly in the running gear section, complicating its return to prominence. So, additionally, Nike's recent financial struggles can be attributed to a combination of economic pressures, supply chain disruptions, and shifts in the consumer behavior. But these factors have collectively impacted the company's ability to maintain its market position and profitability. And for that reason, Nike is down around 60% from its highs that it achieved back in 2021 when it was trading at over $170 a share. In response, though, Nike's new CEO, Elliott Hill, has outlined a strategy to address these issues. Hill plans on limiting sales and focusing on selling products at full price to counteract the excessive promotional activities that has harmed the company's brand. He also aims to restore the company's focus on sport by emphasizing athlete-centered product innovation and storytelling. So, furthermore, Hill intends to rebuild trust with key wholesale partners by reconnecting and collaborating more closely, aiming to reverse declines in wholesale revenue and strengthen Nike's competitive positioning. Looking at Nike's financials, as of recording this video, Nike stock is priced around $73 per share. In the fiscal year 2024, they reported revenue of $51.36 billion, which is a slight increase from the previous year. However, recent quarters have shown some revenue declines with a 7.7% drop year over year as of November 30th, 2024. So with all that being said, what is my bear case for Nike? So Nike does still face some stiff competition from brands like Adidas and emerging players such as On Running and Hoka. Supply chain challenges and potential tariff issues could also really impact the profitability. And if these hurdles persist, the stock could continue to struggle, possibly declining further, though I do believe that the bottom would have to be close. I do not see Nike getting much cheaper than it currently is because Nike is Nike. Now, onto my bull case. Nike's strong brand and global reach position it well for a comeback. The return of former and now current CEO Elliott Hill is expected to revitalize the company, focusing on core sports segments and strengthening wholesale partnerships. Analysts believe that these efforts could lead to great share appreciation, though I do think this turnaround may take some time. Bill Ackman, the billionaire hedge fund manager, purchased 13.2 million shares of Nike late last year and currently has over $1.2 billion invested in Nike in his fund. So he definitely sees Nike recovering nicely over the next few years, and I definitely agree with him there. Let's take a look at my estimates as to see where I think Nike will be trading in 2025 and the years to come. All right, here are my estimates for Nike. Nike ends the fiscal year of 2025 in May of this year. So I will be using my estimates from 2026 all the way through 2029. The trailing 12-month revenue for Nike came in right around 4.9 billion, which is a decrease of minus 4%. That is a big reason why Nike stock has been down so much. Their revenue growth has dried up and we are now seeing a decrease, which has led to such a large sell-off in Nike. In 2026, I do have Nike getting back to some slight revenue growth coming in at 2%. I really think Elliott Hill is going to turn around this company. I do have net income growth coming in at 24%, and I just kept that steady all the way through 2029. With that being said, I have revenue in 2026 coming in right around 50 billion and growing all the way to 60 billion by 2029, which is still only high single digits revenue growth, which isn't anything special. I do think though that Nike will be able to at least get these numbers. I think a lot of my numbers are very conservative. I kept net income growth just steady at 24% all the way through 2029, getting EPS for full year 2029 all the way up to $8.76. As you can see right now, Nike controls about a 23 PE ratio. So I kept that pretty much steady throughout the coming years with my low PE estimates of 20, high PE estimate of 25. By 2029, I have a low share price coming in at $175.17 and a high estimate of $218.96 with an average share price of $197.06. With all of that being said, at Nike's current price of around $73, there is a lot of opportunity in Nike over the coming years. Not to mention, Nike offers a pretty nice dividend, and that dividend has been increasing for 23 years in a row. So buying in now into Nike, I think it's a great opportunity for the years to come. And with some great share appreciation, you will also be collecting some nice dividends. So yeah, if you're not in Nike, I think now is a great time to start a position. My third pick for 2025 is AMD. Everyone knows AMD. This stock has been talked about so much over the last few months, but there is a great reason why AMD has had a spotlight on it as of late. For those of you that don't know very much about AMD, AMD is a powerhouse in the semiconductors, competing directly with NVIDIA and Intel in AI, data centers, and gaming. They don't just make computer chips, they are powering the next generation of AI, cloud computing, and high-performance computing. With cutting-edge Ryzen processors, EPYC server chips, and Instinct AI accelerators, AMD is aggressively expanding into some of the fastest-growing tech sectors. Their chips are in gaming consoles, high-performance PCs, cloud servers, and AI applications, making them a major player in today's computing landscape. With all that being said, though, NVIDIA is still miles ahead of AMD. Now, AMD stock has had a strong run in recent years, but it has also faced some serious issues as of late, and their stock price is reflecting that. Since 2023, AMD has been pushing hard into the AI chip market where NVIDIA is dominating. While AMD has made significant progress, investors are still waiting to see if the company can gain enough market share to compete effectively in AI computing. At the same time, economic conditions, supply chain constraints, and enterprise spending trends will play a key role in shaping AMD's growth. If AI demand continues surging and AMD's AI chips really start to take off, the company could be a huge winner. But if competition remains fierce or if supply chain issues hit production, AMD's growth could slow down. So, diving into AMD's financials, as of recording this video, AMD stock is priced around $110 per share. The 2024 full revenue came in at $25.8 billion, which was up 13.7% year over year. Expected 2025 revenue growth is around 15 to 20%. 2024 full year EPS came in at $3.31 and is expected to hit somewhere at around $4.50 plus in 2025. Analysts have a 12-month price target for AMD between $140 and $150, so there is quite a bit of upside at these levels according to analysts. So what could hold AMD back? Let's get into my bear case. Despite AMD's strong position, there are some real risks that could slow them down. NVIDIA's dominance in AI. Right now, NVIDIA owns over 80% of the AI accelerator market, and they aren't slowing down. AMD is trying to break into this space, but NVIDIA's CUDA software ecosystem gives them a major competitive advantage. If AMD can gain significant AI market share, revenue growth could unfortunately disappoint. Enterprise spending could also slow down. Many of AMD's customers are big tech companies and cloud providers. If the economy slows down and these businesses cut back on their infrastructure spending, AMD's data center revenue could unfortunately stall. But in Google's last earnings, they announced an acceleration in their enterprise spending. So I don't see this happening this year, but hopefully we don't see this in the years to come. AMD also really needs to figure out their gaming and embedded sectors of their business, as both of them have been a drag on the performance of the company as a whole. If these risks ended up playing out, I could see AMD stock dipping under $100, maybe 80, 90 bucks in 2025, which would in fact be an amazing entry point for AMD, because even with these risks, I believe AMD has a very bright future in the years to come. I'm talking 2026 plus. 2025, I think, is a year to really build your position in AMD before it's too late. Let's take a look at where AMD could be trading in the future based on my estimates. Here are my estimates for AMD from 2025 through 2028. Here on the left are their 2024 numbers, which are all a bit skewed just due to some acquisitions and other things. It does make their GAAP-based financials look a bit skewed. So you'll have to take that in consideration as you look through 2025 and beyond. So in 2025, I am expecting revenue to come in right around $33.5 billion, up from $25 billion in 2024, which would be a 30% increase for the year. I'm expecting them to continue at a bare minimum 30% revenue growth all the way until 2028, which I think is definitely, honestly, on more of the conservative side for AMD with their business and with everything going on in the data center and AI sectors. So by 2028, I have full year revenue coming in at 73.6 billion, with net income growing from $6.5 billion in 2025 all the way up to $16 billion in net income in 2028. That is a 35% income growth from 2025 and on, after this one-time 300% net income growth due to some just the acquisitions that I was talking about earlier. It's going to look like their net income grows way more than it did on a GAAP basis. So EPS, I have them doing about $4 in EPS for 2025, and I have that EPS actually growing all the way up to $14.67 in 2028. Just keeping their PE as very conservative. I have them having a low PE of 25 and a high PE of 35, which would get their stock price in 2028 all the way from my low estimate of $366 up to a high estimate of $513, with an average stock price of $440.18. I do have AMD being almost a $600 billion company in 2028, which I think is very doable for them. So at their current price, which is right around $110 to $113, somewhere in there, there is a ton of upside for AMD if you look past this year and into 2026 and beyond. So now is definitely a great time to enter AMD and start a position and start building it out over the next 6-12 months. At number 4, we have Celsius Holdings. Known for its fitness-oriented energy drinks, they reached an all-time high of around $100 per share, but have since been in a free fall, falling about 70%. Why have they fallen so drastically? First, that could be attributed to PepsiCo. Celsius's primary US distributor has been reducing its orders to optimize inventory levels. This adjustment has adversely affected Celsius's financial performance, leading to a 31% year-over-year revenue decline in its latest quarter, with earnings dropping to zero. We also see that the energy drink sector has experienced a general slowdown. Despite this, though, Celsius's retail sales rose by 7.1% year over year in the latest quarter, outperforming the industry overall 2% growth. Despite these challenges, though, analysts do remain optimistic about Celsius's long-term prospect. The company acquisition of Big Beverages in November 2024 does aim to enhance the supply chain control and production flexibility. Most analysts have a buy rating on Celsius stock with a consensus price target of $41. That's quite a bit of upside from these current levels. As of today, Celsius stock is priced around $22 per share. The company has been experiencing significant growth and does still have a path back to growth, with revenue forecasted to grow 15% annually over the next 3 years. Now, what could still continue to go wrong for Celsius? The beverage industry is highly competitive, with many players entering the health-focused segment, such as Alani and Ghost Energy. Celsius is also still up against the big dogs like Monster and Red Bull. Supply chain issues or marketing missteps could impact growth. In a bearish scenario here, I do see the stock could decline further to the $15-18 range, which, once again, just like AMD, would be an amazing entry point into Celsius Holdings for the long term. Now, into my bull case, health-conscious consumers are increasingly turning to better-for-you beverages, and Celsius is capitalizing on this trend. Partnerships with major distributors like Pepsi are still helping them scale rapidly. This did hurt their numbers last year, as Pepsi overbought inventory of Celsius, which led to their sales looking better than they really were last year, and has led to a major growth slowdown as Pepsi is working through their built-up inventory. This should be resolved as of now. If they continue expanding their market presence, this stock could start to really see a more positive trajectory from here, and this could be a great entry point. Here's my estimate for Celsius from 2025 through 2028. Current revenue for Celsius came in over the trailing 12 months at 1.3, almost 1.4 billion, and that revenue growth is very slight at just 5%, which is the biggest reason why Celsius stock has plummeted from around $100 per share down to where it is now in the low 20s. I do think they'll turn around and we'll start to see some solid revenue growth in 2025, with revenue growing 17% up to 1.6 billion, and then just staying in that low to mid teens all the way through 2028. Like I've mentioned before, I am pretty conservative. I'm bullish, but I want to be on the conservative side of things because I want most of my numbers to be realistic. And honestly, I do expect higher revenue growth in Celsius, but for the sake of being realistic and conservative here, I want to keep these numbers a little bit lower than what I think they actually could be. But I do have revenue for 2028 coming in at $2.3 billion, with their net income growth and margins growing well as well. So in 2028, I have net income coming in at $550 million, with EPS of that in 2028 growing from where it is now around 69 cents to $2.33 for the full year, with Celsius currently has a PE ratio of 32, so I put in a conservative low estimate PE at 25 with a high of 30, which would have Celsius trading at around $70 per share on the high end and $58 per share on the low end, which is still over a double up, almost 200% return if it came in more at that higher $70 per share. So while yes, nothing crazy here from Celsius, and some of their numbers are, they're decent. I'd say these are decent numbers for Celsius. I am expecting better out of them, but conservatively, I still think that this Celsius represents a 200% return over the next 2 years. So now is a great time. If you're not a Celsius shareholder, if the stock continues to dip, all of these numbers, all of the risk reward just keeps getting better with Celsius. So keep an eye on this one. If any more weakness in the stock, just represents a greater opportunity to enter in and start a position. The fifth and final stock for 2025 is Amazon. Now, everyone listening to this video should know Amazon. They are the e-commerce and cloud computing giant and a everyday household name. So if you are not already invested into Amazon, this is one that you will definitely need exposure to in your portfolio. Let's dive into their financials. So Amazon stock is currently trading around $232 per share. In Q4 2024, they reported net sales of $187.8 billion and earnings per share of $1.86. Amazon has projected a 5 to 9% revenue growth for the first quarter of 2025, following a record-breaking $638 billion in sales for 2024. The forecast suggests a deceleration compared to the 11% growth experienced in 2024. However, I do think that this is a slight sandbagging by Amazon, and I do still expect to see 10% growth plus in 2025. Now, what could hurt Amazon in the short term? Regulatory scrutiny and increased competition in both e-commerce and cloud services could pose challenges. Amazon did report earnings and signaled weaker guidance for 2020 growth for revenue growth in Q1 2025, which did cause the stock to drop 5%. Every single stock price drop in Amazon is a buy. So if you are not already invested in it, now is a great time to enter Amazon. High capital expenditures might also pressure margins, but Amazon, with how much cash they have on hand, they need to be investing into themselves to continue to innovate and continue to grow as a company. In the bear scenario, though, however, I do see the stock could drop down to maybe $200 to $220 a share, but I don't really foresee Amazon getting that low anytime soon. My last estimate here is for Amazon. Amazon, over the trailing 12 months, revenue came in at $637 billion, with revenue growth right around 10%. I do have Amazon continuing that 10% revenue growth from 2025 all the way through 2028. I do know that, yes, estimates came in from Amazon. Their guidance was for revenue between 5 and 9% for 2025, but I'd honestly be shocked if they report anything less than 10% growth. With that being said, I have revenue coming in 2025 at just over $700 billion, and I have that revenue growing 10% each year, with the total revenue coming in 2028 at $934 billion, which I honestly think is a very doable number for Amazon with all of the different growth opportunities that they have in their company. I have net income growth growing, and staying right around 20% each year. EPS for the trailing 12 months came in at $5.53. By 2028, I have them doing about almost $11.60 in EPS. Amazon, it always controls a higher PE than the market average. So currently they have a PE ratio of 42. I kept it more conservative with low estimates coming in at 30 and my high PE estimates at 45. So trying to stay in that range there. With that being said, in 2025, I have the share price for Amazon coming in between $200 and $300. I think it's going to be on the higher end there. I have Amazon coming in and breaking the $300 mark sometime in 2025. By 2028, if all of this does end up playing out, I have the high share price estimate coming in at $521 and a low estimate of $347 with an average share price of $434.51 in 2028. Currently, Amazon is trading at around $232. So over the next few years, I do see Amazon doubling up once again and getting over $400 a share. So yeah, Amazon, any dip in the stock is a buy. Amazon did just recently drop a little bit when they reported their earnings just due to some weaker guidance that they reported. I think that's nothing but a buying opportunity in Amazon. So if you don't have exposure to Amazon, get exposure to Amazon. And there you have it, my top 5 stock picks for 2025. Remember, investing does involve risks, so always do your own research and consider your financial situation before making decisions. If you found this video helpful, please give it a thumbs up and subscribe for more content, and let me know your thoughts in the comments below. I'd love to hear what you think are the best stocks for this upcoming year and moving forward. Thank you all for watching, and I will see you all in the next one.